Good afternoon, everybody. It is September 12th, and tomorrow we are going to find out if inflation may be turning the corner. I'm not saying it's going away yet, but I'm saying an important report comes out tomorrow that I want to show you and let you see what may be happening with inflation and therefore what I think may be happening with interest rates over the next few months. So let's go right to the charts and take a look and see what's happening. So when bonds go down, rates go up. And here's what I want to show you. This is the pattern that we've been over the last month or so. We've had this really important floor support. So again, you don't want rates to go low, bonds to go lower. That means rates go higher. So we've been hitting this floor support and bouncing off. At the same time, we've been hitting this falling support level, resistance level, and we hit it and bounce off, hit it and bounce off, hit it again today. Tomorrow, we're going to find out. I think we're going to break out one way or the other tomorrow. And I'm going to show you what's happening with the inflation reports. And this is really important. First off, this is a measure of monthly inflation. And this is the annual inflation chart. So you can see we went from 8.3 to 8.6 to 9.1 to 8.5. So last month in July, we had zero inflation. That's after a huge month at 1.4 in June. I really think that gas prices really dropping down made a huge impact on that inflation. I think we're going to see the same thing for August. Gas prices have stayed low for the month of July. So if we get a number like zero or even negative 0.1, we could see another 0.3 of improvement from where we're at now at 8.5, and maybe that could drop down to 8.2. And look what we've got in the coming months, a 0.3, and look at this one, 0.08 and 0.05. If we can keep gas prices low, and that's going to be a big if, guys, because here's what's happening. Right now, Europe is trying to wean themselves off of gas from Russia. That means they're going to go on the open market, which is going to put pricing pressure on the open market and could cause a little bit of an increase in gas or oil prices. So we're going to keep an eye on that. But if we stay in that range where prices don't go up too much, look at the numbers we have to go against in 2023, 0.8, 0.9, 1.3, 1.1, 1.4. If in 2023 gas prices stay low and we keep inflation numbers in this 0.2 to 0.3 range, we're really going to see inflation tumble in the first half of next year. And I'm kind of hoping for that and honestly almost kind of expecting that. And if that happens, that's going to really help the real estate market as rates start to come down again. So let's take a look at rates and mortgage inflation, how that inflation drives mortgage rates. Look at the parallel between this, by the way, is your interest rate, and this line on the bottom that comes up is the inflation rate. And you can see right after the COVID hit, demand went down, so inflation went to practically nothing, but rates didn't follow it. So what's happened here is rates kind of stayed level. If you look at this where inflation took off, why didn't rates follow it? And the reason is because that's when we were in a quantitative easing period. In other words, when mortgages fell off and rolled off from refinances or purchases, the government was there to scoop them back up, and they were buying literally billions and billions of bonds. And over the period, they literally bought over a couple of years about $1 trillion worth of mortgage bonds, and that held rates down. Well, they stopped buying them you can see right here in about the latter part of, I think it was late January, February, and then rates really started to take off at that period of time. And you can see now the correlation is kind of going back into place. Well, if inflation starts to drop again, we're going to see, I believe, mortgage rates fall again as well. That's going to be a positive. So we've got the old supply and demand chart. We have still got a limited number of homes on the market. We still have a ton of demand, millennials, pent-up demand from people who in the last year weren't able to get a house. And of course, you've probably heard corporations are still buying a lot of inventory. So what does all that mean? I think what we can see is if rates start to taper a little bit and maybe fall back off just a little bit, I think we're going to see that support the housing market. We'll see home prices maybe stay flat. You're going to see home prices decline in some areas. You're still going to see home prices go up in other areas. It's going to be kind of spotty. But in the month of July, 21% of homes that were for sale that sold had to cut prices. Don't take that as a negative. That means 79% of people did not have to cut the price to sell their home. So still a pretty strong market out there. I expect we're going to see home prices moderate, maybe 0 to 3 or 4% inflation over the next 6 to 8 months. And I think we may see rates decline as long as we see those gas prices come down a little bit in the market. That's my take on it. We'll see what the inflation report comes out tomorrow and does and how the market reacts. This is Randy McMullen. We'll talk with you soon.